Bitcoin has fallen more than 50% from its all-time high. If you bought anywhere near the top, you are deep in the red right now. And here's the part nobody wants to say out loud. Every other time this has happened, the bottom came later and lower than almost anyone expected. Because Bitcoin doesn't move randomly. It moves on a clock, a 4-year clock that is now repeated 3 times in a row. And by that clock, this bear market may only be half over. Let me show you exactly where we are and why the bottom probably hasn't happened yet. Start with the engine behind the whole thing, the halving. Unlike gold, oil, or stocks, Bitcoin's supply is written into its code. Gold miners can dig faster when prices rise. Oil drillers can pump more. Bitcoin can't. Its new supply is fixed, no matter how high the price goes. And roughly every 4 years, that new supply is cut in half. It happened in 2012, in 2016, in 2020, and again in April 2024. 4 halvings so far. But supply is only half the story. Each halving also arrives with a fresh wave of attention. New buyers, new money, new leverage. Shrinking supply running straight into surging demand is what sends the price vertical. And after each of the first 3 halvings, the very same chain of events played out, almost mechanically, every single time. It goes like this. First, accumulation. The quiet months after a crash, when almost everyone has given up and stopped paying attention. Then markup. The halving bites, the price grinds higher, and belief slowly comes back. Then the blow-off top. Pure euphoria. Leverage everywhere. Your barber giving you coin tips. And finally, markdown. The long, grinding bear market where the people who bought the top capitulate one by one until it bottoms. Boom, bust, repeat. The only question that matters for your money is where, in that cycle we are right now. And to answer it, you have to look at the last 3. Cycle 1. The halving hit in late 2012. About a year later, Bitcoin peaked near $1,100, then fell roughly 87%, bottoming around 150. On its own, you'd call that a fluke, a tiny young market doing crazy things. Except it happened again. Cycle 2. The 2016 halving, a peak near $20,000 in December 2017. The run that put crypto on every front page. Then an 84% collapse, all the way down to about 3,000. And Cycle 3. The 2020 halving, a peak near 69,000 in November 2021. Then a 77% crash to around 15,500. 3 halvings. 3 euphoric peaks. 3 brutal bear markets. And look at the timing, because this is the key. Each peak came 12 to 18 months after its halving. And each bottom came roughly a year after the peak, give or take a month. Sit with how reliable that's been for a second. Not a vague tendency, but the same shape and the same timing, 3 times running. That is the clock. Now let's put today right on top of it. The most recent halving was April 2024. 18 months later, October 2025, Bitcoin peaked at about $126,000. Right on schedule, almost to the month. Then in February 2026, it broke below 60,000, bounced, and has been bleeding sideways to lower ever since, more than 50% off the high. So here is where we actually stand. We are only about 8 months past the peak. In every prior cycle, the bottom didn't arrive until roughly a year after the top, and from far lower than this. By the cycle's own clock, we are not at the bottom. We are somewhere in the middle of the slide. Sentiment is washed out, the headlines have turned dark, and that is exactly what the middle of a cycle bear feels like. Not panic, exhaustion. Before we get to where this could actually bottom, and the one reason it might not play out this time at all, if you're getting something out of this, take a second to subscribe. One clear market question, every week. Okay, where's the bottom? Here I have to be straight with you because most cycle videos won't be. This does not mean another 80% crash is coming. Look closely at those 3 bear markets. 87%, then 84, then 77. Each one has been shallower than the last because Bitcoin keeps getting bigger and harder to move. Every cycle, the gains have shrunk, and so have the losses as the asset matures. This drawdown, around 50%, is already the mildest on record. So the claim isn't catastrophe ahead. It's simpler and much harder to argue with. By time, by structure, by every example we have, the cycle low probably hasn't happened yet. So where and when? Nobody knows for certain, and anyone who hands you a hard number is guessing. But here is what each framework points to. If the cycle keeps rhyming but stays mild the way it has, a 60 to 65% drawdown puts the bottom somewhere in the mid-40s to low 50,000s. And on timing, both clues line up on late 2026. If it repeats in full, like 2018 and 2022, you're looking at the low 30,000s instead. Same window, just a deeper, more painful hole. And then there's the third possibility. The cycle is dead. Since 2024, spot Bitcoin ETFs have soaked up far more Bitcoin than miners can produce. In some weeks of 2026, those funds bought the equivalent of 30 to 40 days of mining supply, a wall of steady structural demand that simply never existed in any past cycle. Grayscale, Bitwise, and ARK's Cathie Wood all argue that wall has broken the 4-year pattern for good. And the fact that this crash is the shallowest one ever is their strongest piece of evidence. And to be fair to that view, this is the first cycle in which Bitcoin is a trillion-dollar asset, held by pension funds, public companies, even governments. A bigger, more widely owned asset genuinely should swing less than the tiny retail-driven market of 2013. If they are right, 60,000 isn't a stop on the way down. It's the floor. And when does it turn? Here's the part most people miss. The bottom is never the rocket. It's the long, quiet base that forms after it. In every cycle, Bitcoin spent close to a year grinding sideways near the lows before the next halving lit the fuse. With the next halving due in early 2028, that points to a recovery building through 2027 and igniting in 2028. And a fresh all-time high, if the rhythm survives at all, most likely a 2029 story. So how will you know which path we're actually on? You don't need a crystal ball. You watch 3 things. Time. The cycle low has never come less than about a year after the peak, which keeps the window in late 2026, not today. ETF flows. As long as institutions keep buying the dip, the floor holds. The day those flows flip to steady, sustained outflows is the day the old pattern reasserts itself. And the halving clock. Historically, Bitcoin bottomed well over a year before a halving, never after. So here's the one idea to take with you. 3 times in a row, Bitcoin has run the same script. Halving, boom, euphoric top, then a year-long bear that bottomed later and lower than people expected. By that script, we are not at the bottom. We're in the middle of the markdown. But for the first time, there's a real challenger to the cycle. The wall of institutional money that arrived with the ETFs. The next year will tell us which one wins. None of this is financial advice. It's a way of thinking, built on a pattern that has happened exactly 3 times, which is a long way from a law. So tell me in the comments, are we at the bottom, or is history about to repeat itself? Subscribe, and I'll see you in the next one.